Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, November 27th. Well, guys, I hope everybody enjoyed their Thanksgiving day and, of course, the long weekend. Many of you took off on Friday. I know I did. I don't like to trade those half days. Very quiet, low volume, just gets you in trouble. So, hope everybody enjoyed the weekend. It was real nice here on the East Coast, and now we're getting into our holiday season. We're full blown into it. We have a few days left of the end of the month of November. That'll put us into some inflows. We know that the retail has been really diving in deep, hard into these highs. It's inevitable. It's what happens. It's unfortunate because many of these retail are always listening to the pundits, CNBC, Bloomberg, Fox Business News. Pick one, and you'll see everything's about how they keep buying the market higher, and that's they bring all their guests in. Anyway, regardless, we're here to make money. We're not here just to be cheerleaders of the market. So here at TMT, what we like to do is we like to follow. Obviously, the trend is your friend, and we're not counter-trend traders. However, this is getting to be a spot where I don't think we're going to see this in a very long time, meaning that we are on our fifth and final leg. Those of you who obviously are subscribers know this already. We are on a sentiment trade, and we're looking for our blow off top, which we're getting right now. We have everything moving in sync as far as just about every asset class. At one point last week, we had crude oil, gold, bonds, stocks all move in the same direction, which obviously somebody's wrong. We'll figure that out in a moment, and we'll also show you how grossly overbought we are. Now, overbought is not a sell signal. Oversold is not a sell signal. Divergence isn't even a sell signal. But there are huge warning signs that you have to pay attention to, especially when you're at these lofty levels. I mean, to buy stocks here is just out of control. It's crazy, especially when you have valuations are this high and through the roof. However, that's when we know that we're going to expect a decent correction. How big, how deep, no one knows until the correction gets started. We're very, very close here to calling a top, a market top at TMT, and of course we'll bring that to you once we do have it. We're looking at the monthly chart of the SPY, and you can see here from the 21 EMA to last sale, we're 12.5% away from the 21 EMA. Now this is a monthly chart, so you can see how dramatic that 12.5% is. Now, this is the 2009 market crash, and you can see that every time we got away from the 21 EMA, markets pull back, and here is obviously the crash, but we did it here, we did it here, we did it here back in January 2016, and it's inevitable to even come down to here, okay? Forget about even a market crash. Look at where we are with RSI. RSI right up in here in the same area, okay? Here, just pitched the same here, okay, and we had the big pullback in January of 2016. It's inevitable, okay? It's just a matter of when. Timing is very important here. Timing is very difficult when you have now just a retail crowd buying the market along with the algorithms. I showed you last week to our subscribers that we had major outflows in spiders, 1.3 billion coming out of the market, and you can look at that by the Wall Street Journal market data. Just go into the wallstreetjournal.com, look at market data. You'll see buy inflows and sell inflows, and you'll see that, and you can peruse that at you will. But selling is coming. Mutual funds and a lot of the institutions are selling into these rallies, so it's another big warning sign, okay? Next, I'm just going to show you the comparison chart of the Dow Jones versus the transportation ETF. Same thing. We have major divergence. Yes, we've had divergence throughout the year. It did not pan out. We understand that, and divergence is not a buy or sell signal anyway. However, when you get to these lofty levels, you have to understand and pay attention to the fact that, well, maybe this time divergence does work out, right? And most of you are intraday traders, day traders, which is fine. You still want to know where you are, because if you are still looking to buy the dip, which that's what we are looking to do, we continue to follow the trend until it doesn't work. And at one point, when you do have that intraday reversal and the market starts to roll over, we as traders need to understand, adapt, and start selling rallies, right? Now, that one day that does happen, the next day we open lower and we reverse, that it moves really fast is what I'm trying to tell you guys. So just be very, very careful. Buying the dips are great, but we also need to be very nimble in this type of a market, because risk off is going to happen extremely fast. Okay, Bitcoin this morning almost at 10,000. It's absolutely insane. So it's going to happen. It's going to happen in a big way. It's going to happen throughout all of the asset classes, because that's what usually happens when you have a major correction or even a market crash for that matter. All right, so ES daily, you can see here we gapped up and we're now into the gap. The real good spot here is a 25.87 and a quarter on the daily chart. The TMT subscribers that use the Pro Trader Premier video has the intraday levels, which are absolutely insane and killing it. So you guys really have to take a look at that. If you're not a subscriber, definitely try the subscription. And if not, if you guys are still a Pro Trader Premier video and you want to take a look at it, just send us an email at support@tradingmarkettechnicals.com. We'll show you some intraday levels here. You can see that the divergence is playing here. MACD, RSI, prices at new highs. MACD's not even close, still in the basement, and the RSI as well. And Q making new highs here. Help of Amazon from Friday, 63.24 and a quarter is going to be a big spot of support. Again, divergence in the MACD and RSI. Amazon, Facebook, and Apple are setting up to be some phenomenal shorts when the market turns over. Of course, we're going to bring it to our subscribers as soon as we get our confirmation. Crude oil, we have more cuts that are on the way, and obviously the crude oil bulls, they love it. In the intraday, when we have our Pro Trader Premier videos, I show you some intraday levels where you can really start to really dissect and really get into the long trade or a short trade for that matter. Okay, but as of the intraday right now, your 21 EMA will be your first spot, and then 55.37 will be a bigger area of support for any type of pullback if you're looking to get into this rally. Me personally, I think the rally is a little bit long in the tooth, and I do think that we're looking for some sort of a market correction or corrective sell-off, if you will, into one of these zones. Okay. Next is going to be gold. Gold really hasn't done anything, but watch gold start to really explode. We've added a 1304 buy-in, a 1274 buy-in. We're looking for lower prices for 1245, 1250 that we can probably buy in. I'd love to see a 1218 print, but I don't think you're going to see that. And at one point for 2018, I think gold's going to be a fantastic play on the long side. But you can see here we're just kind of muddling around here, so really no trade. Intraday gold hasn't been a great day trader as well. Here's the transportation sector. We call the head and shoulders pattern right up in here. This was back in early October. The target was hit. These are for our subscribers. We've hit the target, and now we're kind of bear flagging into the 21 and the 50. We'll see if this actually plays catch up like it did all year, and if it did not, and it starts to break down, watch that 200-day at 169.98. If we break that 200-day moving average, I think this is going to absolutely help the bearish case that the market is topping and probably has topped. All right, and obviously we'll call a market top. As soon as we call it, you guys are going to get it right away. Spiders, we're just tagging along here, the upper end, riding that wave. The 257.97 is your big support along the 256.01. That continues to be support, and that's right underneath the 200-day moving average at 255.27. Sorry, the 50-day moving average. Okay, so just keep that in mind for today's trade. Again, no resistance in any of these indices. I would not short the market. I'd be buying pullbacks until it doesn't work. And if you buy a pullback in the morning and the market does reverse intraday, we have to be nimble enough to get out of our trade and look for the next rally to sell. Okay, Russell 2000, our secondary leader. We haven't done anything. We've had inside days for the last 3 days. Gap support will be down here at the 150.11 all the way down to the 149.43. That'll be a bigger area of support if you are looking to it, and that'll actually absolutely help that case that we're back testing the upper trend line of this downtrend channel. Okay, so that would be a big area of support, and we would hope, as a bull, you will hope for another bounce in the IWM. Unless it's going to be a Q, same thing, rallying up here, continue to just show strength. 21 EMA 153.89 down to the 152.61. So just pay attention to those numbers for today's trade. We have mutual fund inflows that come in. We'll see if the institutions are going to overtake that buy pressure and add some selling pressure this week. It's going to be interesting to say the least. Have a great day. We'll see you tomorrow. Take care.